Hi friends, how are you? By blessings to the God, you are doing well. So this is Dr. A B JENA, faculty member, PG Department of Business Management, Fakirmoni University, Vasavihar, Balasur, Odisha. So friends, I am welcome to all of you to Dr. A B JENA classes. So friends, I will have the request to all of you, kindly you watch from beginning to till end. Definitely you will be comfortable in management accounting. So we are going to discuss the 30 multiple choice questions, and so 30 multiple choice question has been prepared as per the model syllabus. I mean the choice based credit system so far as the Odisha universities are concerned. So as per your syllabus or as per the CBCS, I mean the management accounting syllabus, so 30 multiple choice question we are going to discuss. And friends, I will have the request to all of you, so it's the part 2 and part 1 which I have already posted. Kindly go through the posted video, I mean the 30 multiple choice question part 1 from management accounting. Friends, without delay we will start our discussion. So these 30 vital MCQs will also be useful those who are pursuing the BBA, MBA, MCOM, PMR and MFC and other related subjects, and this discussion will be very useful and fruitful those who are preparing for the UGC NET JRF as well as the other competitive examination, the lectureship, I mean the SSB State Selection Board and Odisha Public Service Commission. So friends, all these 30 vital MCQs we are going to discuss one by one. Again, I will request to all of you during the discussion, if any mismatch or gap will find, kindly you give your valuable suggestion and comments in the comment section. So first one MCQ, the liquid ratio is equal to liquid assets divided by what? A, it's total liability, B, it's current liability, C, it's contingent liability, D, it's non-current liability. Friends, so B is the right option for this MCQ. I mean the liquid asset is equal to liquid assets divided by the current liabilities. I mean liquid ratio is equal to, what is this? Liquid assets divided by current liabilities. Okay, so B is the right option for this MCQ. So next one MCQ, two basic measures of liquidity are what? A, it's current ratio and quick ratio. B, it's gross profit ratio and operating ratio. C, it's the current ratio and average collection period. D, it's the inventory turnover ratio and the current ratio. Friends, so A is the right option for this MCQ. A. Two basic measures of liquidity are what? The current ratio and the quick ratio. So this MCQ from the ratio analysis. So next one MCQ, which one from the amount of a business firm is measured by its ability to satisfy its certain obligations as they become due. Obligation means certain, I mean the current liabilities. Certain obligation means that is the current liabilities. A, it's liquidity, B, it's debt, C, it's profitability, D, it's activity. Friends, so A is the right option for this MCQ. So liquidity of a business firm is measured by its liquidity to satisfy its certain obligations. I mean the business organization or of the firm will pay the certain obligation, or I mean the liability as or when they become due. So A is the right option for this MCQ. So next one MCQ, inventory ratio is a relationship between what? A, it's the cost of goods purchased and cost of average inventory. B, it's cost of goods sold and cost of average inventory, and cost of goods purchased and cost of average inventory. C, it's cost of goods sold and cost of average inventory. D, it's none of the options is correct. Friends, so C is the right option for this MCQ. C. Inventory ratio is the relationship between cost of goods sold and the cost of average inventory. So C is the right option for this MCQ. So next one MCQ, the debt to equity ratio or debt equity ratio establish the relationship between what? Debt to equity ratio establish the relationship between A is that is the lump sum debt, that is the external equities, and current assets, that is the that is the internal equities. B is C, that is the long term debt, I mean the external equities, and equity A, that is the internal equities, and long term debt, that is the external equities, and the current assets, I mean the internal equities. C is C, the long term debt, I mean the external equities, and equity internal equity, I mean the internal equities, or that is the equity share capital or the share capital. Friends, so A is the right option for, C is the right option for this MCQ. I mean the debt to equity ratio establish the relationship between that long term debt, I mean the external equities, and equity, I mean the internal equities, or the debt equity ratio establish the relationship between that is the borrowed fund and the or ownership equity and outsider equity. So C is the right option for this MCQ. So next one MCQ, the standard rule of thumb of current ratio is what? Whether A is 1:1, B is 0.5:1, C is 2:1, D is 1.5:1. Friends, so C is the right option for this MCQ. So current ratio, the rule of thumb is that is 2:1. So C is the right option for this MCQ. So next one MCQ, equity fund or shareholder funds is equal to what? A is equity share capital plus preference share capital. B is equity share capital plus revenues. It's reserves, not revenues, reserves and surpluses. C is equity share capital plus preference share capital plus reserve and surpluses. D is none of the options are correct. Friends, so C is the right option for this MCQ. Equity fund or shareholder funds is equal to what in mathematical equation? Equity fund or shareholders, equity shareholders fund is equal to what is this? Equity share capital plus preference share capital plus reserve and surpluses. So C is the right option for this MCQ. So next one MCQ, what is the rule of thumb for absolute liquid ratio? A is 0.5:1, B is 2:1, C is 1:1, D is 1.5:1. Friends, so A is the right option for this MCQ. The rule of thumb for the absolute liquid ratio is what? 0.5:1. So A is the right option for this MCQ. So next one MCQ. So it's from the standard costing. The formula to estimate the labor cost variance is what? What is the formula to estimate or to measure the or to calculate the labor mix variance? A is total standard labor cost of actual output minus, that is the total actual cost of output. B is standard rate per hour minus actual rate per hour into actual hours. C is that is the revised standard time minus actual time into standard rate. D is abnormal idle hours into standard hourly rate. Friends, so here C is the right option. So formula to estimate the labor mix variance is what is this? That is the revised standard time minus actual time into standard rate. So C is the right option for this MCQ. So next one MCQ, dash is designed, or which one is designed, or which budget is designed after assessment of the volume of output to be produced during the budget period? A is that is the cost budget, B is sales budget, D is production budget, D is none of the above. Friends, so A is the right option for this MCQ. A, I mean the cost budget is designed after the assessment of the volume of the output to be produced during the budgeted period or budget period. So A is the right option for this MCQ. So next one MCQ, the rule of thumb for the acid test ratio is what? We have already, what is the rule of thumb for the absolute liquid ratio and the current ratio? We have already discussed. So friends, you have to remember. A is 2:1, B is 1:1, C is 0.5:1, D is 1.5:1. Friends, so B is the right option for this MCQ. B. The rule of thumb for the acid test ratio is what? 1:1. So next one MCQ. The labor cost variance is measured as what? A. It's the total standard labor cost of actual output minus total actual cost of actual output. B. It's the standard rate per hour minus actual rate per hour into actual hours. C. It's standard time minus actual time into standard rate per hour. D. It's the abnormal ideal hours into standard hourly rate. Friends, so A is the right option for this MCQ. So labor cost variance is measured or calculated total standard labor cost for actual output minus total actual cost of actual output. So A is the right option for this MCQ. So next one MCQ. The type of standard that is the best suited for cost control objective is what? Or which one is the best technique? A it's that is the normal standard, B it's that is the basic standard, C it's that is the expected standard, D it is the ideal standard. Friends, so C is the right option for this MCQ. C. The type of standard that is the best suited for the cost control objective is what? That is the expected standard. So C is the right option for this MCQ. So next one MCQ. The formula to estimate the overhead variance is what? What is the formula? A. It's the actual output into standard overhead rate plus actual variable overhead. B. It's the actual output into standard overhead rate per unit minus actual overhead. D. C. It's the actual output into standard overhead rate per unit into actual overhead rate. D. It's none of the above. Right? So B is the right option for this MCQ. The formula to estimate the overhead cost variance is actual output into standard overhead rate per unit minus actual overhead rate. So B is the right option for this MCQ. So next one MCQ. From the standard costing labor variance, the formula used for calculation of labor rate variance is what? A. It's the total standard labor cost of actual output minus total actual cost of actual output. B. It's standard rate per hour minus actual rate per hour into actual hours. C. It's the standard time minus actual time into standard rate per hour. D. It's the abnormal idle hours into standard hourly rate. Friends, so B is the right option for this MCQ. The formula used for calculation of a labor rate variance is what? Standard rate per hour minus actual rate per hour into actual hours. So B is the right option for this MCQ. So next one MCQ. Material yield variance is measured by using material yield variance is measured by using or formula what? A. It's actual yield plus standard yield into standard cost per unit. B. It's standard cost of revised standard mix minus standard cost of actual mix. C. It's the standard unit price minus actual unit price into actual quantity used. D. It's that is the actual yield standard yield into standard cost per unit. Friends, so here D is the Friends, so here D is the right option for this MCQ. D is the right option for this MCQ. The material yield variance is measured by using the formula what? Actual yield minus standard yield into standard cost per unit. So D is the right option for this MCQ. So next one MCQ. The formula to calculate the material price variance is what? A. It's the total standard cost minus total actual cost. B. It's the standard cost of revised standard mix minus standard cost of actual mix. C. It's standard unit price minus actual unit price into actual quantity used. So last one option, standard quantity minus actual quantity into unit standard price. Friends, so C is the right option for this MCQ. The formula to calculate the material price variance is how the material price variance is calculated by putting this formula, standard unit price minus actual unit price into actual quantity used. So next one MCQ, which one or dash is known as that is the subsidiary budget? A it's the master budget, B it's the that is the functional budget, C it's the cost budget, D it's the none of the above. Friends, so B is the right option for this MCQ. The functional budget is also known as what is this? The subsidiary budgets, or functional budgets are also known as or called as or treated as the subsidiary budgets. So next one MCQ, material cost variance is measured as A it's a the total cost, total standard cost minus total actual cost. B it's a standard cost of a revised standard mix minus standard cost of a actual mix. C it's a standard unit price minus actual unit price into actual quantity used. D it's a standard quantity minus actual quantity into unit standard price. Friends, so A is the right option for this MCQ. The material cost variance is equal to what? The total cost of standard cost minus total actual cost. So here A is the right option for this MCQ. A. So next one MCQ, when the actual cost is less than the standard cost, the difference is treated as or termed as what? A it's that is the favorable variance, B it's that is the adverse variance, C it's both A and B, D it's none of the above. Friends, so A is the right option for this MCQ. That is the variance means that is the gap, I mean the difference. When the actual cost is less than the standard cost, the difference is that is the favorable variance. It's then good for the business. Yes. So next one MCQ, which of the following statements are true for forecasting and budgeting or for forecast and budget? A it's a forecast and budgets are one and same thing. B it's a budget is prepared after the forecast. C it's a forecast and budgets both can be expressed in financial terms. Or D it's all the above. Friends, so B is the right option for this MCQ. I mean, is budget prepared after the forecast is the right statement so far as the forecasting and the budgeting. So B is the right option for this MCQ. So next one MCQ, a budgeting process which demands each manager to justify his entire budget in detail from beginning is known as what? A it's a functional budget, B it's a master budget, C it's a zero based budgeting, Z B B zero based budgeting, D it's a that is the none of the above. Friends, so C is the right option for this MCQ. Budgeting process which demands each manager to justify his entire budget in detail from the beginning is what is this? It's known as that is the zero based budgeting. So ZBB it's the modern that is the budgeting practices. So next one MCQ, the process of budgeting helps in the control of what? A it's the cost of production, B it's liquidity, C it's capital expenditure, D it's all the above. Friends, so D is the right option for this MCQ. The process of budgeting helps in the control or to control the cost of production as well as to will have the better liquidity and also to control the expenditure on capital items. So D is the right option for this MCQ. So next one MCQ, what are the components of absolute liquidity assets? Absolute liquidity assets, A it's cash in hand plus cash at bank, B it's cash in bank plus marketable securities, C it's that is the cash in hand plus marketable securities, D it's cash in hand plus cash at bank plus marketable securities. Friends, so D is the right option for this MCQ. So absolute liquid ratio at any moment, so these assets can be converted into ready cash without facing any problem. So absolute liquid ratios are what? The examples: cash in hand, cash at bank, and marketable securities. So D is the right option for this MCQ. So next one MCQ. R&D, I mean the research and development budgets and capital expenditure budgets are the example of which types of budget? A, it's a short-term budget. B, it's current budget. C, it's a long-term budget. D, it's a, that is the master budget. Friends, so C is the right option for this MCQ. R&D, research and development budgets and the capital expenditure budgets are the example of what? C, long-term budgets. Next one MCQ. Which budget provides an estimate of the capital item that may be required for buying fixed assets needed for meeting the production requirements? A, it's a, that is the production budget. B, it's cash budget. C, it's a capital expenditure budget. D, it's a none of the above. Friends, so here the B is the right option for this MCQ. I mean the cash budget provides an estimate of the capital amount that may be required for buying the fixed asset needed for meeting the production requirements. So B is the right option for this MCQ. So next one MCQ. According to the George Terry, dash or which one may be described as a process of finding out what is being done and comparing actual results with the corresponding budget data in order to approve the accountment. A, it's that is the budgetary control. B, it's a budget. C, it's a budgeting. D, it's a none of the above. Friends, so A is the right option for this MCQ. I mean, according to the George R. Terry, the budgetary control may be described as a process of finding out what is being done and comparing the actual results with the corresponding budget data in order to approve the acknowledgement. So A is the right option for this MCQ. So next one MCQ. Which one contains or dash contains the picture of total plans during the budget period and it comprises information relating to the sales, profit, cost, production, etc. A, it's a, that is the cost budget. B, it's a functional budget. C, it's a master budget. D, it's a none of the above. So friends, so here C is the right option for this MCQ. C, I mean the master budget contains the whole picture of total plans during the budget period and it comprises information relating to sales, profit, cost and production. So next one MCQ. Which one or dash is stated as a budget which is made to change as per the levels of activity attained? A, it's a, that is the fixed budget. B, it's flexible budget. C, it's both A and B. D, it's none of the above. Friends, so B is the right option for this MCQ. I mean the flexible budget is stated as a budget which is made to change as per the levels of activity attained. So B is the right option for this MCQ. So last but not the least, which one is prepared or dash is prepared for a single level of activity and a single set of business condition? A, it's a, that is the fixed budget. B, it's a flexible budget. C, it's both A and B. D, it's a none of the above. Friends, so A is the right option of this MCQ. It's a 29 reverse of MCQ is 30. So here, so A is the right option. I mean the fixed budget is prepared for a single level activity and a single set of business conditions. So friends, so these are all about or the 30 important vital MCQs. So we have already covered or discussed. So I am hopeful that you have learned a lot and definitely you will be comfortable in your examination. So during the discussion, if any mismatch or gap you will find, kindly you give your valuable comment and suggestion in the comment section. So if you like this video, kindly you share it, kindly you subscribe it, kindly you share it. So once again, thanks a lot to all of you.